All right, and we'll go ahead and get started. So, again, thank you guys for joining us for our next and, as of right now, final installation of Coffee and Flood. But if we start to get additional questions, we're always willing to do more of them as well. This session is titled Waiting Periods, Payments, Cancellations, and Financing Options. So, it's pretty much going to cover a broad range of topics that frequently get asked questions about. And I think maybe even more so now with everything that's going on the NFIP side with the shutdowns and everything. So a lot of good information. And as always, we want feedback and questions from all of you throughout this as well. So we're always open to that. For those of you who don't know, my name is Dawn Halkyard. I am the marketing representative with New England Access Exchange, and I'll be serving as your moderator today. And then, of course, you mostly probably all know Diana by now, but I'll let her introduce herself as well.
Thank you. Good morning, Diana. Been doing this a long time. I'm your senior flood underwriter at New England Access, also a commercial lines underwriter, but here to spread some more flood knowledge. The more we talk about it, the better things get. So quick agenda. I'm gonna say again why I am talking about flood. Why are you talking about flood? Why waiting periods, payment options, and why you can't finance. And then the other part of this is how to cancel. Some of these kind of come up frequently over, I don't know, every day, 10 to 20 times a day. So we're gonna dig into some of these. At any time, please stop me. You can happy to turn off your mic and just say, hey, what about this? Anytime. I'm a mom and my brain is always going like a bouncing ball in a room. So I can pick up where we stop or pause. Similar, if you don't want to speak out, please put anything you have or any questions of any kind into the comment box. And Dawn is really great about saying, hey, Diana, answer this. And then I do. All right, let's get going. The top 3 reasons why I've been doing these flood sessions with unique topics is basically to reduce hurdles that agents and everyone out in the marketplace is kind of facing every day. To educate, to basically make sure that every agent has a full knowledge and understanding of flood in its entirety, not just the NFIP. We want you to be an expert in flood, not just a carrier or a policy. And the last, probably the most important, flood is a cat coverage. It has severe costs for life, limb, and property. And the markets keep changing since the 70s for sure, but just since 3 months ago, things have changed. We're living in this unprecedented time with the government shutdown. It's not the first, it probably won't be the last, but in this case, basically, things are definitely more unique than they have been in the past. No, am I frozen? Oh no. Okay. I might say that a few extra times and I apologize because I got your internet is really weak. It's really not. But okay. So are you talking about flood? The United States experiences more flooding events now than they ever have before. So to quickly summarize some of these statistics here, just from 2010 to 2019, there were 130 major flood disasters that were declared. That's about 13 a year. That's pretty different from the year before or the 10 years before where there were only 23. Now, that isn't necessarily covering everything, though. Those are the major disasters. If you've ever lived through it, minor flood can also be a pretty significant disaster. So since the year 2000, at least one event or one flood event has occurred in the US on average about 300 days per year. Now, every state has had flooding. That's all 50 states, that's the District of Columbia, and everyone was specifically in 2021. The hazard doesn't care where you live, doesn't care if you're in a zone or not in a zone. It can happen anywhere. Flooding is happening everywhere. So some of those statistics seem pretty high, but you'll be sad to know that really only a few of those who needed it actually had flood insurance. So why is that? This old way of thinking, that requirement mindset. If my lender isn't making me, then I don't need to. Maybe it's not a priority like all the other policies that people have, like with their auto, their home, or their business. Maybe it's never happened to them, so they feel immune. We have an obligation for this profession, for this industry, and obviously for this specific coverage, but in general, to change that. It's really our duty to do that. E&O claims have been on the rise just since early 2020. That's not to say E&O claims didn't happen before that, but very significantly since 2020. Basically because people didn't talk about flood exposures. So, oh, I asked you 16 years ago, you said no, and I've never asked you again. Your lender didn't require it, so we're not worried about it. Then with that, though, most people who were uninsured or underinsured really feel like they were misled or didn't get everything that they need. And we are a litigious society. So if we're not, as professionals, giving all of the information and letting the insureds make their own decision based on, the knowledge that we impart on them, we're not really doing our job. So we can change this. And we do that by continuing to talk about flood, the ugly parts of it, the great parts of it, all of it. And again, that's why we've been doing these smaller, deeper dives into smaller sections of flood insurance and what it makes up of it. Slide, please. Let's talk risk versus requirement. If it rains at your house, it can flood at your house. If you're not taking it seriously as the agent or the professional giving knowledge to others, why would they take it seriously? You need to be talking facts about risk. Do you have an exposure? If your location has flooded, or if it did flood, would you lose property and need to repair that damage? Then you have an exposure. And then talking openly about it. It's not just one time of the year. It's not even just an annual ask. It's an all the time. It's happening all the time. So let's say you asked them last year when they bought the first house, and this year they're on their 5th policy with you for other homes that they've been buying. Flood should be involved in everyone and every time. And we can do that by just giving up our professional knowledge to ensure that they know that there could be a risk there. All right, onto the fun, juicy, real digs here. So we know that the NFIP has been using them. They do it to avoid adverse selection like any other program, a policy carrier would consider doing. Now, you can purchase a flood policy even when there is a flood warning or an event in place, but they do wait 30 days. When that waiting period starts on the date that the application is signed and the payment is made. So maybe not last Tuesday when you signed it, but if payment hit today, that's when you're paid. Like those things need to be met for your 30-day wait to start. Now, it's only waived for, with the NFIP, FDIC-backed loans, certain MAP provisions, and certain wildfire or post-wildfire exceptions. And then the waiting period does apply to both new business and increases in coverage. Slide, please.
All right.
So on the other end, on the private side, there are some private markets that also use waiting periods to avoid adverse selection and or to allow appropriate time to meet the requirement, or the 3 requirements to bind. So some private markets have no waiting period at all, except for an inaction name store moratorium. Once the moratorium is listed, things can bind that day and on, nothing in the in-between. So some of those private markets have 5 days, 7 days, 10 days, 14, and even 15. As you might imagine, I believe it's kind of like a marketing strategy, right? If the NFIP has 30, we can do it better for you in less time. So I feel like that is definitely a part of it, but also because they feel like their processing window, 15 days at most is enough. And similarly, that waiting period starts on the date the app is signed, submitted, and payment is made. All 3 must be completed for it to start, or to the waiting period to start to bind your policy. And then some private markets will waive a waiting period if there's a new loan or a new finance. So not just having a finance loan, but having a new loan, so some new transaction. And similarly, it applies to both new business and increases in coverages, as you would see on the NFIP side. Slide, please. Payments. We all love talking about flood. So since the beginning of flood policies in general, they were always required to be paid in full. Now, throughout the years, some of this has gone to from fully earned or non-cancelable to now being able to cancel for certain reasons, because people were like, hey, this is done, I should get my money back. And they're right. So with that update with, I believe it was the 2.0, or maybe it was 1.4, something like that. Basically, it resulted in different reasons that you can now cancel your flood policy with the NFIP and get a return premium. Now, paid in full means that the insured or a lender fully pays for that policy at inception, regardless if they're paying that lender monthly or not. Like, that's totally not the same. Now, flood policies can't be financed due to that similar reason. So because of those special cancellation rules that are set out by the NFIP guidelines, we don't actually meet financing rules to obtain a finance from a finance company. All right, let's get more specific. Slide, please. So in the past, all of them were required to be paid in full with the NFIP, but they do have plans currently to offer possible payment plans. You'll either have a pay in full option, or you can select 12 monthly installments through the NFIP. There won't be extra fees, but you cannot kind of change that billing in the middle of a term. As we kind of understand, the world is not a standstill per se, but things are waiting on the burner to get going. So the law was passed in January of 2025. They were hoping to have that available by the end of 2025. Not quite there yet. Could be coming. The world keeps changing every day. Slide, please. On the private side, there are basically 3 requirements to execute a flood contract. The signed and accurate binding requirements, so that's your applications, your state forms, elevation certificates, whatever they ask, loss runs, plus full payment received by, say, us, we're an MGA, so we have to order a bind, so we have to have payment on our end, or directly to a carrier. There are many carrier portals out there where you can do direct payment with, say, an Aon or a Neptune, and I could list out, there's many. With that, plus all of that now has to go to, or I'm missing one, submission of all those requirements have to go back to that specific carrier, and compliance with all of the conditions and terms of that policy. So I have a copy down here below of one of those carriers where payment is required at binding. It basically says that in their policy agreement that we will only pay you for a claim if these 3 things have occurred. So you'll notice that payment is actually the first one. So let's say you ordered something with me binding today. If I don't have a receipt from payment from you, I can't necessarily pay the carrier at that same moment issuing the bind. So what would happen? Well, to solve some of this, certain private people do have some unique grace. They might say, we have, as an MGA anyway, intermediary, you have 3 days to get us the payment, or 7 days. But those direct portals that we have in the private market, it's right now, right then. Typically that first term it's required, but then again, some will let you have a mortgage pay similarly. Slide, please.
We actually got a question that came in through a private chat, so I just want to address that. It wanted some clarification on the payment plan with NFIP and how will they cancel for the 12 months installment, and how will they handle claims? Which, do you want me to kind of address that some? Or do you
No,
have
yes, Dawn. Yeah,
Okay.
I leave the expert in the expert hands.
All right. So with NFIP, that's one of the reasons that it's taking so long for the 12 payment plan to actually come into play. They are trying to work with their write your own carriers. So what they have stated is that these standard cancellation provisions will apply. So how it's worded right now, if there's invalid payment, they can cancel the policy. So we're not sure if this means they're going to offer a grace period in order for it to get there, or if it's just not paid by the due date, if the policy will now have provisions where it can cancel immediately. So we're waiting for information on that. But the other thing it does tell us, if we do have a payment plan on the NFIP, if you go to report a claim before they will start settling your claim, you have to pay the balance. So if you've only made 1 monthly installment and you report a claim, you're gonna have to pay your other 11 monthly installments before they will work with you on that. So that's the plan as of now with how it's going to work.
And that kind of goes along with what is on the slide. So perfect question, perfect timing. Like the NFIP policy has a similar agreement in place that says you have to have paid the premiums, that you comply with all the conditions of the policy, and you've basically provided all of the required information to obtain this policy. Love it. I hate it, but love it. So onto our favorite, canceling. Again, it's a love-hate relationship. I understand where they're coming from, why these kind of came to be, right? So NFIP policies can only be canceled for specific and valid reasons. There used to be a very large variety. They have limited those back down to probably, they all almost kind of fit in this category except for that other. There are a few unique and weird situations that occur in unique and weird places. So you gotta have a place for that. But these are typically the reasons why you can cancel an NFIP flood policy midterm or after it's been bound. So no insurable interest, i.e. you sold it. To establish a common expiration date, you have other policies and you want everything to go smooth, great. If you have duplicate coverage, say you bound 2 NFIP policies, well, you only need one because in insurance, nobody will pay you twice, unfortunately. It's not eligible for coverage. So say there was damage or it's no longer there or something about the risk itself changed, making it not eligible. So like the community is like not participating anymore. A lender no longer requires your flood insurance. So you've paid off your mortgage and they're not forcing you to get coverage, or an invalid payment or fraud. So in current life, so ignoring the potential for the install part, because we don't really know until they actually tell us anything. An invalid payment or fraud is the process transaction, it was bounced, right? So that's one way. Fraud is somebody stole someone else's credit card to pay for their flood policy. Fraud, simple as that. And then other reasons as clarified by the NFIP. So NFIP has options where you can go from, say, a residential 1 to 4 family home, you're going to turn that into condos. So like they have other reasons that kind of apply specifically to them and how their policies can move around. Also, I think it's not ever used anymore because I'm not sure that it still applies. Dawn will correct me if I'm wrong, but when they did the update here, they dropped the preferred policy and the repetitive loss pieces. Like they dropped those, and some of those other cancellations out there kind of revolve around them. So I'm not sure that they apply, but in this world, something could be grandfathered out there that I don't know about.
That any of us can, but that is correct.
All right, next slide, please. So,
good, thanks. How are you?
okay, so it's not for me.
Oh, you got muted somehow, Diana.
Oh, there I am. All right, sorry about that. So each reason code that we talked about, or one of those before, has specific documentation that is required to be obtained to support your request in order to get that return premium. So for example, you sold your house, it requires an NFIP cancellation document and a proof of sale. Another example might be you got a LOMA, which basically moved your house out of a flood zone, so you're not required to have it anymore. That would require your NFIP cancellation document and a copy of that lender release letter, like excusing because of the LOMA. They're not going to require it anymore. They agree. Slide, please. Now, private, very similar, but different. So we are similarly beholden to NFIP cancellation rules. They do not have to accept all of them because, as I kind of described, there are certain ones that only apply to NFIP and how their structure is. So it wouldn't make sense to try to apply it to a private carrier. So the typical ones that we see are a LOMA, just as I described before, or a lender has been paid off, so the requirement's removed, it was sold, or it was demolished. So similarly to the NFIP, we do require a cancellation document, but it's an LPR, not an NFIP cancel request, because it's not an NFIP policy. It does require a reason code and the same type of supporting documentation. Slide, please. So as I said, there are several that just do not apply to private policies just based on how they're written and specifically say NFIP and how NFIP processes work. And some examples of the ones that just don't apply in private, example being duplicate NFIP policies. It doesn't apply because unless it was written with the exact same carrier, with the exact same policy period, through the exact same contact point, it's impossible to have duplicate private policies. But I say impossible, and then the world could be crazy and stuff could happen. But in that case, it would either be fraud or error, and that would be a different reason code. Another example in there, NFIP has a cancellation if it was written to the wrong facility, which goes back to like repetitive loss or preferred or residential versus commercial. So in private, that doesn't really apply because it's talking about NFIP's internal programs. So those two reasons would not help you midterm cancel a private flood policy. Slide, please. Both. These gotta cover both. So there are a few reasons that seem to come up very often, which are not valid grounds to cancel a private policy or an NFIP policy. Insured got a new policy for a lower premium. That's really awesome, and I am very sorry, but that's not a reason to cancel. It's actually a reason that it actually puts them in a pickle because they kind of now have duplicate coverage. So for from point A to that point, they have two in place. That first policy has a duty to that full amount, but that moment that they have two, they're both on the hook, but neither's on the hook, or they're only each on the hook for a portion. So you can't really have that. It's very difficult to cancel a first policy for this reason with the next person when they find out they can't cancel the first. So now you have two policies and neither one of them will cancel for you. So very weird and murky, but you cannot cancel a flood policy for either of us, NFIP or private, for a lower premium. I'm very sorry. The insured doesn't want the policy anymore. Correct me if I'm wrong. Again, I don't believe that's an option in NFIP either. I don't believe that rule was ever reinstated after a time. I think it stopped in the early 80s and then never again. So unfortunately, unlike a property policy or homeowners, you can't just decide you don't want it anymore because it's considered for an annual term. So at the very beginning, it's 12 months, whether we love it or don't love it, but we can't just cancel because they don't want it anymore. Or at least we can't cancel it to give you any money back. For us, the policy would go to the expiration and away it would go if you didn't want it again. And then the other one I hear probably the most often, which is so very difficult or weird. The lender can get a forced place policy that is cheaper. So a lender forced place policy typically covers the lender. It's not really in it for the insured, which our policy or a policy you might be trying to cancel actually is. So one, it's not even a comparable change, but two, it's like the first one here. You can't just cancel because you can get a lower premium. Very sorry, they do not apply. I wish they did, they just don't.
And there is just a question to clarify that, yes, these cancellation reasons are midterm. So you can't cancel a policy midterm. An insured could certainly choose to go to a cheaper premium at like a renewal and just rewrite.
Yep, for sure. And it's basically after day one. So we say midterm, but it's really after as soon as it's bound, these are your only options. But these ones aren't. No options. These are no good. While many of the reasons that most people expect to see those for, like I don't want it, I can get rid of it, they just don't apply. And it's basically because flood policies are beholden to regulation, and they are outlined and provided by the NFIP program and regulators behind them. The government decides, regulators decide, and our hands are tied currently. Slide, please. Why can't we finance? I know we've mentioned this a little bit. There actually could be some companies out there that are willing to finance a flood policy, but usually the cancellation clauses within a flood policy basically preclude them from doing it. One of the first parts of the finance agreement require that you can give a 10-day DNOC for non-payment to the finance company. However, flood policies can't be canceled for non-payment after they're bound, because they are required to be fully paid. The only time they can be canceled in regard to like that non-payment thing is if an NSF, so a non-sufficient funds transaction, occurred after that moment. So again, policies don't go into effect until they're actually fully paid. So keep that in mind. But many have tried, and it's only, again, as Don kind of pointed out, even with the potential new, if they say somebody did finance a flood policy, great, they can't cancel for non-pay. As long as the carrier's paid and there was a claim, coverage would be coverage. But now who gets that money though? Whether it's the finance company or the insured, or who gets their pieces of the pie, that's the murky parts that they're still working out with regulators on trying to finance them. But I am team finance. We can finance everything else. And we can't afford the life we live. I am team getting it financed, but there are some murky things, and I would not want to lose coverage simply because I needed a payment plan. That's not fair. That doesn't sound right to me. Not a regulator, but that's my thoughts. Next, please. So just as a bonus, we are all living in this weird world. It doesn't matter which side you stand on or don't stand on or care or you don't care. We're all being impacted. This industry of insurance is being impacted, citizens wise, many other ways. All I can talk about today, right, is insurance part. Insureds, all of the professionals in the entire line, we're all being impacted by this shutdown. Yes, flood specific, because that program we've all been able to rely on for so many years, so over 50 years, right? This is what's going on, and this is what we know. So in case you needed extra data here. So all the existing policies that are active and the claims on them can still be paid with any existing funds that happen. Now, the problem is you can't write new business and you can't bind or renew policies. So that's a problem. That means you have policies that you thought were going to be this, and now you have to kind of go back out in the market. Crazy. Fine. Basically, all the processing requests and endorsements and cancellations, they're on pause right now. The good news is, and not to be that person, but the private market never closed. All those things were open. Now, as professionals, we have to be able to pivot. If the government opened tomorrow, the world seems to go back to normal and you can kind of pick up things, except for there's now waiting periods again. Like quotes need to be requoted, renewals may have lapsed, you may have lost certain credits, or that tier 1 and tier up to tier 5, I think, drop off of those rates. There's a lot of weird things going on. Now, it means more work in general, but the private market is open and has been open. And I believe that both NFIP and private markets, we need all of them in the flood options bucket. We need as many as we can, because we all know that the more diverse the options are for us, the better coverages are and premiums can be. So we're still open, and the shutdown could end tomorrow and our life kind of goes back to normal. But that's what we know right now. I think that's my last slide. Oh, good. Here's the better side. We are open. Everything though, we can't just take that, or I wanted to point out some of the problems, I guess, even though we're open. Every private market basically is looking to write risks that best fit their appetite. That means they're looking at elevation data and program specifics and whether the house is elevated or not elevated. It's made of wood or it's joisted masonry, like they're looking. Private markets do not have to take all risks just because they participate in a community. NFIP can do one, or NFIP needs that, and we can't offer that all the time. I can say though, in the private part though, you don't even have to be in a participating community to be an option. So a program may not accept you, but it won't be because you participate in a community or not. And unfortunately, just because you do doesn't mean every private market will take every risk. It's just not insurance the way it works, unfortunately. And then in the private market, they do require their own applications and documents that apply to their industry and programs. So I've best no matter what anybody sends me anyway. NFIP has different questions and applications and forms and documents. And I do my best with whatever I get, because I work here too. We do with what we got. But just know that they are different. They're asking different questions and they want to know different things. NFIP didn't, and I correct me again if I'm wrong, but didn't really care what your replacement cost value was or is. The private market cares. Like that's an important value. So just putting 250 replacement cost value and 250 limits, that's another issue, because we need the real facts. And then in the private market, things are similar but different, right? We do have waiting periods, we have payments, and some of that are similar. And it may not be though what you're used to. So it's always good to take count of that and just know that if it's me you're working with, I'm going to help you through any way I can, but just pay attention to the nuances and the differences. NFIP and private policies, they're not the same. The way you bind to them, the way they behave, the way claims go, none of it's the same. And just because one is good and the other isn't, or this helped me, but this couldn't, unfortunately, the world that we live in right now with the government shutdown and the way things are flowing, private markets are more now than ever kind of scrutinizing. Because in the past, they got the ones that kind of needed to be out there with them, right? And it wasn't always about price. It was just they needed to be out here because private, you can get higher than those limits that NFIP could offer. So it was great. But now everyone is going to those private markets now. So more people in there trying to, get a piece of it. They're just taking better looks right now or deeper looks. So things we might have been able to write a year ago, we maybe can't write right now because that's how their market strategy is kind of going. And is that the last one?
That is, because now it's open floor. Ask any question.
And I'm only late because we waited. We should never wait. Any other questions, concerns, or worries? Again, you guys make me smarter by asking questions, and it makes me go look for more answers, and maybe I can do more of these. So anything you got, I'm happy to take on the
All
spot.
right. There actually is another private question that came in, and it wanted some clarification on the replacement costs and like settlement for flood losses.
Okay, so we did a class on this one actually not too far back. I believe we agreed. So NFIP, it's at the time of the claim you can choose.
So it depends. Like there's only one property type that's actually eligible for replacement costs right now on the NFIP, and that is a single family principal residence. So the principal
know.
residence means that you have to live there at least 80% of the time, and you're gonna have to prove that.
Okay,
Everything
so
else
then
is actual cash.
yeah, and then on the private side, pretty much every quote that I offer is going to be replacement cost. At the time of the claim, most of my carriers let you choose, do you want ACV or RCV? But mostly what I'm offering on my end anyway with my private markets is RCV. I think I have 2 carriers that if you say I need a better premium, they may offer you ACV versus the other. I don't know if that answered, but hopefully. Like it's my people look at replacement cost as a program determinator. So let's say this program, their max total replacement cost value of any one structure is 5 million. So that's basically what they're looking for. So anything under 5 million in total value, regardless of your limit, but in that value. Then others, it's 1 million or 40 million. Like it just varies so widely.
And then do they have to be insured to 80% of value is a question on that?
So that's so fun. So in flood, it's not that per se. Most often we see it's 90% insure declared value that you actually see. Because like I said, on the private side, most are offering that replacement cost. So they want to know that you at least told them as close as you could to 90%. So at the time of the claim, when they take that same valuation, like that's what they're looking at. My flood policies, at least none of the carriers I work with, have a co-insurance penalty when it comes to that. You can pick a limit from 5,000 all the way up to the full replacement cost value because flood policies are different, right? And that the lender only requires you to cover just their loan if they're requiring you to get it. So it doesn't even have to be 80%. So flood's just a little different than that.
Right. And then I will say on the NFIP side, if we're talking about that principal residence, you do have to prove that you can be insured to either 80% or the maximum value that they allow, if we're talking about that one. But yes, there's no co-insurance penalties with most of them because of that requirement. And then there's another question in here. Will current insureds receive an expiration notice during the shutdown?
I think they are, to be quite honest. I think the government shut down and paper's not going out the door. I mean, they laid off like 75% of the staff. They stopped a lot of their remapping activities that would have normally been finished by the end of this year in like 30 states. So I don't work for the government, but I don't think so. I don't think so.
I don't think they've ever gone out through the government. Maybe some write your own carriers might be taking that responsibility on to send some kind of notice, but it won't be from the government.
I mean, I think I get a bazillion marketing about it all the time. The government shut down. Here's what you could do. Like I do see them all the time. So I wouldn't be surprised if any of those write your own, like right or selective or any of those out there are saying the government shut down. Please take, caution or notice. I mean, some of the people that have come to me recently have been like, I didn't even realize this one is going, like I have 3 days now. What do I do? We do whatever we can do. And we just keep running the bricks and see where you can find someone to take on that. But you're not alone if that's happening to you. I just encourage everyone to just take a look at the next like 50 days ahead. I know the government may open again tomorrow, like I said, and great, but I would encourage everyone to take like 50-day look ahead, because you'll still have waiting periods. The renewals that lapse during that time, correct me again if I'm wrong, but they don't normally let you pick them back up again. Right, Dawn? Like in prior
Right.
shutdowns, no, nothing happens from this point to this point. You start again.
Mhm.
So I would just take inventory of that. So you can be ahead if they did open up.
So there's a good comment in here. I do know with the NFIP and the shutdown, if a renewal bill went out before the shutdown and the client made the payment, the renewal will be issued.
That's
So
totally accurate. Yep.
Mhm.
Anything from before that date, but nothing that would have gone out during these 45, 46 days now. Right, however long it was. So we know we're outside of that normal renewal period. So there are people that are being affected already. And man, missing a payment, right? Missing anybody who missed a payment, it didn't work out. Like they had to start again. So, right, this was a good one. Thank you guys all for coming. I appreciate you. If you have any questions, concerns, worries, please, please, please call, reach out, send emails. I love good feedback. I love bad feedback. And I just really love your questions. Again, it makes me smarter, and it gives me something to do in the cold winter months of Vermont.
Perfect. Any last questions before we get ready to end today's session? All right. Well, thank you guys very much for joining us for our other session of Coffee and Flood, where Diana spills the tea. So we definitely appreciate you being here. As per all our other ones, this one will be going up on YouTube. I'll also send out copies of the slides, and you guys will get everything early next week. So I will have that to you hopefully Monday or Tuesday. But thank you again for joining us. Have a wonderful day.
Thanks, guys. Bye.
Thank you.